When people talk about assets, they mean anything that has value and can help a person, business, or government build wealth or generate income. Assets are the resources you own or control that can be converted into cash, used in operations, or provide future benefits. The first major type is current assets. These are assets that can be turned into cash within 1 year. Common examples include cash itself, bank balances, accounts receivable, and inventory. Current assets matter because they show whether a business can meet its short-term obligations and keep operating smoothly. Next are fixed assets, also called non-current or long-term assets. These are things a business uses over a longer period of time, such as land, buildings, machinery, vehicles, and equipment. Fixed assets are not meant to be sold quickly. Instead, they support daily operations and usually lose value over time through depreciation, except for land in many cases. There are also intangible assets. These are valuable assets you cannot physically touch. Examples include patents, trademarks, copyrights, brand names, and software. Even though they are not physical, they can be extremely valuable because they protect ideas, create recognition, and give a company a competitive advantage. Another important category is financial assets. These are assets that come from a contract or ownership claim. Examples include stocks, bonds, mutual funds, and bank deposits. Financial assets are often held for investment purposes and can provide returns through interest, dividends, or price growth. Assets can also be classified as tangible and intangible. Tangible assets are physical, such as buildings, vehicles, and inventory. Intangible assets are non-physical, such as patents and goodwill. This distinction helps us understand what can be seen and touched versus what represents legal rights or intellectual value. For individuals, assets can include personal assets like a home, car, savings, jewelry, and investments. For businesses, assets are recorded on the balance sheet and help measure financial strength. The more useful and valuable the assets, the stronger the position of the owner or company may be. In simple terms, assets are the building blocks of wealth. Whether they are cash, property, equipment, or ideas, they all play a role in creating value and supporting future success.